Hey everyone, welcome back to Corporate Decoder, the place where we unpack dense corporate filings and give you the real story without the jargon. So get ready because today we are diving into Odyssey Marine Exploration's latest report. And let's just say some financial movements are happening that might surprise you. Before we jump in, if you love getting straight up financial insights without the fluff, make sure you are subscribed. And for those of you who love to chat about these findings and connect with fellow finance enthusiasts, our Discord community link is in the description below. Come join us. So what we have here is a Form 8K, which is basically a report of major events that a company has to file, kind of like a company S public diary for significant happenings. This particular report comes from Odyssey Marine Exploration, Inc., a company whose stock symbol you might know as OMEX. They are traded on the Nasdaq capital market. Now, what is making headlines in this 8K is what they did with some of their debt and how that translates into company stock. The main story here is about a form of debt that the company had, which is convertible notes. Think of these like IAS that can be turned into company stock. Odyssey Marine had two such deals, one from March 2023 for about $14 million and another from December 2023 for $6 million. Now, here is where it gets interesting. In September of 2025, investors decided to swap about $830,000 of that March 2023 debt for nearly 700,000 shares of Odyssey Marine S common stock. And that is not all. In late August and through mid-September of 2025, investors also converted over $1.5 million of the December 2023 debt into more than 1.2 million shares of the company S stock. So, what does this conversion mean? Essentially, Odyssey Marine is reducing its debt load by issuing new shares to its lenders. The company reported that these issuances were done under specific rules in the law that allow for these kinds of private sales without needing to register every single share, which just means they are following certain legal procedures for these conversions. After all these conversions, Odyssey Marine now has over 47.6 million shares of common stock out there. While this might seem like a lot of dilution, meaning each existing share now represents a smaller piece of the company, it is a strategic move to pay off debt without using cash and potentially improve their balance sheet long term. This is a common strategy when a company wants to deleverage or has limited cash flow. Looking at this from a big picture perspective, Odyssey Marine Exploration seems to be actively managing its financial structure. By converting debt into equity, they are clearing their obligations and signaling confidence to investors that they can handle their debt burden. This can be a positive sign, suggesting the company believes its stock is a fair or even attractive way to settle its debts. The key question for investors will be whether this reduction in debt leads to improved profitability and growth, or if the increased number of shares will weigh down future earnings per S-share. Now, for my take on this whole situation, this filing is all about debt management. The company is swapping debt for stock, which is a classic move to clean up the balance sheet. It tells us they are prioritizing reducing their financial obligations. The good news is less debt typically means less interest expense and more flexibility. The potential downside, as I mentioned, is more shares outstanding, which can dilute the value of existing shares if the company S growth does T pick up pace to offset it. It is a trade off. For Odyssey Marine Exploration, the direction appears to be one of financial restructuring, aiming for a leaner, more debt-free operation. Their strength lies in their willingness to take decisive action to address their financial obligations. A notable risk is ensuring that the company can generate enough revenue and profit from its operations to make these newly issued shares worthwhile for shareholders in the long run. We will need to watch their future earnings reports closely to see if this strategy is paying off. Alright, that is our breakdown of Odyssey Marine Exploration. S latest filing. What is your take on these numbers and what they signal for the company? S future. Do you think converting debt to stock is a smart move here? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord link in the description to join the conversation. Thanks for watching, see you next time.